This is TWiT.
Did you see? I actually meant to talk about this on Sunday. We had Paris Martineau, who works for Jessica Lessin at The Information. We just didn't get around to it. But I thought this was very interesting. Jessica Lessin's husband, Sam, was at Facebook. He was a Facebook vice president. He had his own startups, a couple of them. I got to know him then because I was a big fan of his startup. He is now a VC, Sam Lessin.
Following his father's footsteps. I was a friend of his father.
Oh, I did. Who is his father?
Robert Lessin was a major investor, banker and investor.
I did not know that. Sam was just a sweetheart. I always thought Sam was smart and really nice. He has his own investment VC firm, Slow Ventures. And instead of investing in startups and in companies, they've decided to start investing in creators. They've joined a few individual investors, spending $1.7 million for a 31-year-old YouTube personality, Marina Mogilko. They didn't buy her.
I was going to say, this sounds like trafficking.
She's not for sale. No, they invested in her. They gave her $1.7 million in return for actually, I think, a small, a chunk, a 30-year employment contract, or not contract, but a 30-year investment deal, 5% of her creator-related earnings.
Once she makes over a certain amount.
Over a certain amount, plus a percentage from any IP she develops. So it could be even longer. Marina said, if I write a book...
It's like a record deal.
It's like a record deal, but it's a long deal. What do you think? Investing in people instead of in products or companies.
I thought that's what all great employers do from the get-go.
It's a good point. They always say we're investing in the team, not the... Yeah.
So
I think it's like scholarships in a way. And maybe we should look at it that way, where maybe you should pay back your scholarships only when you start making money. And maybe you pay a little higher rate if you make a lot of money or something like that. So it's interesting. It's also interesting to say this is a way to support a creator, which I like. The problem is the underlying ways in which the creator actually makes the money to pay it back hasn't been revolutionized.
No.
So you revolutionize one part of it where you can invest and give some money up front, and I think that could be interesting. But I'd really like to see more innovation in how that creator in turn gets revenue for those 30 years.
Is this the same type of tactic for people to write books?
No, it's not at all.
No, they get an advance
it's
for
an advance
a book.
for a specific book. It's advance against royalties. And it's the other way around, really.
okay.
Instead of you giving them 5%, they give you 5 or less per book. It's not a lot of money. So this is different. As you said, Jeff, Sam Lessin told Vice that they don't get any money unless she's making in the range of hundreds of thousands of dollars. She takes that off the top. Adding the number will adjust with inflation as well. If she decides to become a lawyer or just gives up YouTube, she keeps the $1.7 million. If she gets a Netflix deal or a job with the YouTube related to the creator economy, she has to give them 5%. 5 is, of course, much less than an agent would get. But they're not making. I don't know how much they're helping her get the deals. That's another question. What do they do for this money?
Is it basically? Oh, go ahead, Jeff.
No, you go.
I was just going to say, is this just a loan? But no one else would loan against this, so you're doing...
Well, I guess it's a loan
in the sense that...
you have to pay it back. Yeah.
Well, I think that's the right question, Stacey, because unless she's investing this in some way, why do you invest in it? Why does the company take investment at all? So they can grow faster than they would otherwise.
Yep.
So what does the money do for her that lets her do more than she otherwise would do? Maybe it means she can hire... a staff to help her make more stuff, or I don't know.
Help her be more efficient as a creator and just cut down a little bit of angst and stress from being a creator, where they can actually focus on doing the job.
The Genius Award,
And you could focus on riskier stuff in the hopes that it pays off, in the future, because you don't have to pay your bills today out of your creator funds, right? So you can do longer, slower projects. I mean, giving people runway is always good for those people, right? I mean, provided they they do something.
Provided they're
useful with
focused, right?
Yeah, I'm like, if you gave me runway and I just spent it on chips and read books the whole time, maybe that's not great. But if I built something,
yeah.
And actually, Sam made the same point you made, Ann. He said, even if you invest in startups, you're investing in the people. This is just making that explicit. It's interesting. I mean, I think you are seeing something very different in the media scene. This is one way that the internet and YouTube have changed that, and TikTok and others have changed that, which is, when I was working in mainstream media, the last thing any company wanted to do is to promote a star, because it meant that was going to cost them a lot of money. They wanted
to lose them.
Take that leverage.
And then you'd lose them. So they wanted you to be a star, but they had mixed feelings about the whole thing. And in any event, NBC saw its operations as more than any individual, right? So, maybe Tom Brokaw was a star, but it was really a bunch of people. And there was certainly star maker salaries, even more than she's getting, being handed out, lots more than she's getting being handed out. But now you're investing, but in that case, you were the company that providing the infrastructure, doing the backbone, kind of like TWiT is. And now it's just, you're saying, go ahead, do whatever you do.
This is your budget.
What if
kind of
Sam
riding on YouTube too, in a way? They're letting YouTube do all that stuff that normally NBC would have done.
What if Sam came to Hank and said, Hank, here's $1.5 million.
Hank would say that's not enough.
I own 5% of you for the next 30 years.
I don't know. Hank, we're talking about my son, who has a fairly successful TikTok channel, has already been approached by investors. So there are definitely people out there who want to throw money at him and say, but nothing quite so explicit as this. I'll own 5% of you. 5% of you is the problem.
What kind of returns is he promising? I mean, look at that.
Well, he hasn't done any deals yet, so he's signed a management deal with a company that does this, but mostly what they do is they get him ads, they get him revenue. So, but there are people, big name people have come to him and said, we'd like to put money into you in some way.
For what?
I mean,
what's the quid pro?
Well, I don't know all of the deals. My kid is like going like crazy. I don't know. I get one of them was a product tie-in. So we want to invest in a product that you're going to do. He's going to start selling salt.
Salt. Yeah.
And
that's an investable thing, yeah.
Yeah. Well, I said, no, don't let them invest here. I want to buy in. So I invested. His mother and I have invested in him.
That's what's up.
That's a little friendlier investment too,
Yeah.
So I think that's why I bring this up. Not so much about Hank, but just in general. This is a new way of thinking about it.
It makes it real.
It's a new way of thinking about it.
So if Hank, let me put it this way then. If Hank suddenly had a big wump of money, right? He could hire publicists to get his name way out there. He could to get him on the Today Show and do all that stuff and pump him. He could hire a production team to make more things across more platforms. I'm just brainstorming here.
Yeah.
He could. What else could he? Well, he could then make more products than salts, right? He could come up with
but that's what's so weird, because again, if NBC comes to me and says we're going to pay you $1.7 million a year to anchor the nightly news, they do everything except I do the hosting.
Right.
This is kind of the other way around. You do everything. We're going to give you money. You do whatever you want with that. We're just going to take whatever happens. That's a weird leap of faith and kind of a strange.
Well, okay. Hold on. So think about it from the venture world, where you will have, for every huge home run, you're going to have 5 of yours utterly fail, right? And then a couple make even, and then 1 or 2 do like triple, 5x maybe. So if you think about investing in this creator, you've got a creator. You're going to take 5% of them. Let's say she creates her own empire worth, I don't know. I'm trying to think of what's like 500 million.
Well, that's kind of what they're saying. Lessin said, and this is the Vice article, Slow Ventures is close to finishing up the paper work with more people it will be investing in. Listen to this. Hoping one of them becomes the next Jeff Bezos or Elon Musk or Kim Kardashian. Now,
those are very different things.
Yeah, that's a little weird.
But look at someone like Reese Witherspoon. 2012, I think it was. She started her own production company, and now it's worth like $900 million. So if you funded Reese back in the day,
but the way you would fund
$45 million now
is you would make a deal to fund the production company. These are just like, I believe in you as a person, whatever you're going to do.
But
if you invest that to start a company, you're making a piece of it.
Yeah, she's going to create a company around her stuff. Do they? I mean, if they're giving me money, are they doing the deal with Stacey Higginbotham? Or are they doing it with SKT Labs LLC?
No, well, so that would be the latter would be more traditional. I think about Spotify giving the Who's Your Daddy host $20 million a year for 3 years. That's a more traditional thing. We're paying you $20 million. You're going to work for us and make a podcast for us.
Right.
And then we're going to get the benefit of that. That would be that kind of investment into your production company. This sounds more like if they had just said, here's $1 million. Go do something. And
but you can do more than one thing then. So then you're not tied to that one product. So investing in Stacey, right? So you could decide, somebody could invest in your media property today, right? And then you owe them back and you have appropriated that. But you could decide, I want to start the Stacey Light Switch company. And in the Sam Lessin deal, Sam would get a piece of that because it's related to IoT. And you're freer to start more ventures.
And if she does a job, like if she's like, you know what, this YouTube thing's not working out, I'm going to go work for
apparently they don't get
Amazon.
that. They don't get that.
They don't get that. So if you have a real job, for like
I'm sure the contract is more specific, but what they've said is she could quit, become a lawyer. They wouldn't get any of that. It's like whatever she does as a creator. I'm sure that. I would hope the contract would say you're going to keep doing. I don't know. Normally you'd say, and for that we expect you to do YouTube for 5 years.
Right. There's usually some type of
but I don't. Doesn't sound like it though. It sounds like more like they're buying you. They're buying a percentage of you. I don't know. I would feel weird saying I'd like to buy 5% of Ant Pruitt.
Yeah. That would be a little
we don't
weird.
know what the contract says. We only know that they're trying to market to creators to tell them that this is a good deal. So
right. Maybe it is more concrete. Yeah.
I think about, again, from the IT perspective, like a CIO saying, you know what, we really need to ramp things up, and goes out and looks for like an infrastructure manager or what have you to help really tighten things up between all of the different properties. And they hire this infrastructure manager, and the infrastructure manager says, I'm going to get this done, but I need you to just sign the checks every month so I can just make it happen, regardless of the cost. And a lot of the big tech companies, they're doing that. They just sign the checks because they need everything to run on time and no downtime and all of that good stuff. So they're invested in the vision of the people that they hire, and they just continue to write the checks. It sounds similar to me, but maybe that's still a little old school thinking.
But there's usually, you're working for me.
Mm-hmm.
I don't think that it sounds more open-ended than this, but I don't know. Lessin says he thinks he's stumbled into the solution of one of society's longest-standing and most burdensome issues, debt. He says it's so messed up that young people have all the equity value because they're the ones that are going to do the work, provide for the future.
Oh boy,
they have the future potential, but they don't have any of the cash.
So redo scholarships, please.
Yeah.
So this gets close to that. The idea that, you can invest in a college student and they'll go on and do things and give back some of their. This gets into basically what is glorified indentured servitude.
Yes, that's kind of my feeling. But Sam says no. It's the opposite of that.
Or
of course
is it
going to say that
patronage? Is it Da Vinci and patronage?
It's not patronage because they're taking 5%.
Right, percent. Yeah.
I mean, the Medicis.
It's still an investment. Even if it's a 30-year payout. Sam says, I'd rather it were permanent because
that's
30 years is too short a term. He gives us an example. What if we'd done this with Jeff Bezos and then he made sure that he never made any money. He just borrows forever, so there's never a return. And because there's never a return, you still don't get paid. He says that's the only thing you have to avoid as an investor. So he says,
so if she starts her
I would
own
rather the
company?
deals be forever.
If she starts her own company, that becomes part of, like if she becomes a lawyer and creates her own.
No, I
firm?
suspect, well, I don't know. We don't
It has
know.
to be related.
I think it's related to being a creator. She actually already has YouTube videos, language learning companies. She has a $475 course she offers on how to start a YouTube channel. So she's already monetizing. I would guess that we don't know the contract, but there's verbiage that kind of says in this area, if you do anything in this area, we take 5%. But it said specifically, but not if she quit YouTube or became a lawyer. So.
Okay.
I don't know. It's a little. It's a very interesting deal, and maybe we should get Sam on and ask him.
Oh, that'd be great.
Yeah,
that'd be really great.
To justify it. He's been on Twitter,
Mr. Howell.
Yeah. It's just a strange. I don't know if I like it or not. I don't. If my son came to me and said, "Hey, I've got this offer," I would say no. I would say don't do it.
Because of the 30-year term, or
I'd say,
He doesn't need money.
Well, he doesn't need money. But I
he
can't give him that much money.
He could grow the business faster, Sam. Hank could.
Yeah.
With money.
But I think it's better to.
But I agree.
bootstrap.
Just psychologically, just realize it's always over your head. You always owe somebody 5% of everything you do.
Yeah. And I feel like it'd be better bootstrapping than taking that money and then owing somebody some unknown amount of money. You're not.
And then you're
going to
give an
loan
agent
because there's no cap on it. It's not like once you've paid back the 1.7, there's no cap. You could give them billions if you made that much
like
money.
an advance.
Right.
Then.
So angel investing is a better idea?
Yeah, I mean, if somebody said, I want to invest in a company that you're going to start, Hank, and we'll share the equity out of that, that's sensible.
It has a fence around it.
It has a fence around it.
And space. Yeah. But I want to come back to the idea of scholarships. Imagine if a scholarship fund were set up such that if you come out of school and you work in social justice, as my daughter will, and you never make a lot of money, you probably don't pay much back. But you come out of school and you become a lawyer and you make a fortune, you pay a higher proportion back.
But those are loans.
A higher interest rate. Pardon me?
But those are loans, right?
Yeah. Well, that's what we do now with student loans, and the poor students thank God I work at a state school, so we cost a lot less, but it's expensive to live in New York. Our students leave with debt.
Right.
And then they go out into a field where they're not going to make a lot of money at first, because that's the way it works. You pay your dues, et cetera.
Right.
And so the debt we leave students with is awful. If we instead said, we're investing in your future, indeed, you're going to have to report your income, figure out how that works too when you get off the clock, but let's just imagine you will and properly. And if you make this much money, you pay back this plus this much of the loan.
Have a sliding scale, if you will.
You don't pay back. Yeah. Based on the success that you get from your degree. And now the problem with that is then you'd only give loans/scholarships to, law students. So the university would have to have some role in here to say, no, we want a rounded student body. But there's something in here in what Sam has done.
They've talked
education.
They've talked about doing this for kind of like what AmeriCorps does right now, which is it's not quite that way, because AmeriCorps takes things like if you were a public teacher or a social worker, you get a delay in paying some of your student loans, and I believe some of them
I've never heard
are
of AmeriCorps.
Forgiven. It's a big
it's like the Peace Corps. But it's
a program for kids coming out of college
working
to
in America.
work in somewhere in America in a job that's necessary. AmeriCorps actually funds journalists.
It's a great idea. I love it. I'd love to see the Peace Corps come back. Well, it's not gone anywhere. It's still there. But I'd love to see it be more.
It's still here.
Yeah, but I'd like to see it be part of I know people are yelling. I'd like to see compulsory public service. Kid gets out of college and owes 2 years to the. No?
No.
You don't like that idea? I love that idea.